Market structure. Market structure is the most important thing. And once you are good with the market structures, almost 50-55% of the work is done. Market structure will help you to place yourself in the right direction of the markets majority number of times. Market structure is divided into few topics. First one is identification of the swing points and structures, along with premium and discount theory, different types of structures, and then we will talk about how exactly multi-time frame structure works. But before picking our first topic, which is our identification of the swing points, I just want to know how exactly markets go up higher or how exactly markets go down lower. Have you ever heard about the word market trend? So let's first discuss about market trend. So there are different types of trends. First one is the bullish trend. Next we have bearish trend, and then we have sideways trend. So what happens in bullish trend is prices appreciate over time. So that's why it is called bullish trend. And how exactly prices go up higher in that specific trend? By forming higher highs and higher lows. And this is the most sustainable and efficient way how prices can move up higher. If you are thinking that if prices move up higher like this is nice. So no, you're wrong, because this is the most sustainable way how prices can move up higher. Same goes to bearish trend. Whenever the prices are moving down lower by forming lower highs and lower lows, this is the most efficient and sustainable way how prices can continue to move down lower. And when it comes to sideways trend, prices just consolidate, and it's basically a range bound market where prices just shuttle between your support and resistance or demand or supply. So these are your three types of trend. In bullish trend, whatever up move you are seeing, this is an impulse way. Whenever the prices appreciate, the movement is quick. That is called as impulse. And whenever the prices retrace, it's correction. Whenever in the bullish market prices move up higher, it go up higher in an impulse fashion. That means it go higher quickly. And whenever prices start retracing, like here, it happens in a corrective manner. Whenever the prices resume and start its movement in the upward direction, again prices will go up higher in an impulse way. And whenever the prices retrace again, it will be in a corrective manner. Same happens in bearish trend. Whenever the markets go down lower, it will be aggressive. So it's impulse. And whenever prices retrace, it will be corrective. So this was about different types of trends. Let's now get started with identification of the swing points. So now in this case, what's happening? Prices are moving up higher. Prices are bullish. So here we got an impulse push to the upside. Then prices start correcting. And again, when we got a realignment and prices again continue to move up higher in the impulse manner, prices simply take out this high. So now in this particular case, what was the lowest point which prices have printed before prices take out this high? It was this, right? So this is our low. And from wherever markets start retracing after taking out the previous high, that will be our high. That means prices start retracing from here, right? So this is our high. And whatever the lowest most point which we have printed before taking out this high will be our low. Again, in this specific case, what happened? Once prices take out the previous high, prices start retracing. And when prices realigned and again bulls take the charge and start pushing the prices higher, prices simply take out this high. So what was the lowest most point which we have printed before we take out this high? It was this, right? So this is our low. And from wherever we start retracing, that will be our high. So to keep it simple, when we print a high, we retrace and we take out the high. This is our low, and this is a strong low because this low was responsible to take out this high. So this is a strong low. Once prices start retracing like this, now you have taken out this high. So this becomes our strong low, and from wherever we start retracing, that is our high. But that high is a weak high, okay? Because our overall intention is bullish. So this high is supposed to be taken out. So whenever we got a realignment and when again prices resume its movement towards upward direction, prices again take out this high because this is a weak high and we got a failure of this. That means we got a break of structure here. So before taking out this high, what was the lowest post point which we have printed that was responsible to take out this high? It was this, right? So this is our higher low, and from wherever we start retracing, that will be our high. Now we are contained within this low and this high. So this is our swing point. So again, when prices come down lower and when prices again resume its movement towards upward direction and take out this high, which is a weak high, then this low was responsible to take out this high, right? So this is our higher low, and from wherever we start retracing, that will be our higher high. It's as simple as that. Now let's talk about the identification of the bearish trend swing points. Now in this particular case, prices are bearish and whatever downward push which you are getting, they are impulse, and this bullish price action is corrective because our overall trend is bearish. So this was an impulse we got, then prices corrected, prices start moving up higher, and again when we got a realignment and bears take the charge, prices again start moving down lower, and when we take out this low, what was the high which we have printed? It was this, right? Which was responsible to take out this low. So this was our high, and from wherever we start retracing, that will be our low. So this is our low. Prices retrace, and again when we got a realignment, again bears take the charge and push the markets lower. And when we take out this low, what was the highest most point which we have printed? It was this. So this is our lower high. And again when we take out this low and we start retracing, that is our lower low. So to keep it simple, we got a drop, we got a retracement, and again got a drop. So when we get a drop and when we take out this low, so what was the highest most point which we have printed? It was this. So this is our swing high, and from wherever we start retracing, that will be our swing low. Now again prices give a push to the upside, and again we got a drop. Prices simply take out this low. So what was the highest most point which was responsible to take out this low? It was this, right? So this is our high, and from wherever we start retracing, as of now we are not getting any signs of retracement. So whenever we get any signs of retracement like this, then we can say that this is our low and this is our high. So now we are contained within this high and this low. So this is our trading range, or this is our swing point. So it's as simple as that. I hope you get a better idea of what swing points are. Now, do you think markets are that simple that you can easily identify markets are creating highs, lows, highs, lows? No, it's not like that. So let's move to the line chart where we can actually get a feel and a replica of live market. Now here we're going to talk about how actually live markets will look like. Now in this particular case, we are going to identify the swing points when markets are bullish. Here we got a push to the upside, we retraced, and again we got a nice impulse push to the upside which was responsible to take out this high which we have printed previously. So what was the lowest most point which we have printed before taking out this high? It was this, right? So this is our low. Prices retrace again once we take out this high, and from here again we got a nice impulse push to the upside. So what was the lowest most point which we have printed before taking out this high? It was this, right? So this is our low, and this was our previous high. So this is our low high, this is our higher low, and once we take out our this high from where we got a true pullback from here, right? So this is the high which we have printed, but that will be our higher high. Then again prices come down lower, prices again come to your discounted area, again come into some sort of support area, and from here again we got a realignment and prices start pushing up higher, and we finally take out this high. So what was the lowest most point which we have printed before taking out this high? It was this. So this is our low, and from wherever we start retracing, that will be our high. So it's basically simple. You have to keep it simple. Imagine you have printed a high, you have to project it with a horizontal line, and once that high got taken out, what was the extreme lowest most point we have printed before taking out this high? It was this. So this is our swing low, and from wherever you start retracing, that will be your swing high. Now let's try to identify swing points when the trend is bearish. Here we got some nice push to the upside, and then we take out this low. Here we got a break of structure. So what was the highest most point before taking out this low? It was this, right? So this is our high, and from wherever we start retracing, that will be our low. So if you see, this is our protected high, because this was the extreme most point and this was the one that was responsible to take out this low. So this is our protected high and this is our targeted low. So prices come to the extreme, and again we got a realignment and prices start dropping down lower, and we take out this low. So what was the highest most point which we have printed before taking out this low? It was this, right? So this is our swing high, and once we take out this low, what was the point from where we got a retracement? It was this. So now we are contained within this high and this low. What happened next? Again prices come up higher, again we got a realignment, and when prices take out this low, this was the highest point which we have printed before taking out this low. So it's as simple as that. I hope the things are clear and you are good with identifying your swing points. Let's talk about premium and discount theory. Consider yourself buying something. If you're buying something, what you will look for? Discounts. It's normally a human tendency to always attract towards discount if you are buying. So same goes in the markets as well. If you want to look for longs, you will look for discounted pricing. What I mean by that? Let's consider this is our leg. Now we know how to identify our swing points and our swing leg. So once we take out this high, this was the lowest most point, and from wherever we start retracing, that will be our high. That is the highest most point. So now we are contained within this low and this high. So this is our trading range, and this is a weak high because the trend is bullish, and this is a strong low because this was the one that was responsible to take out this high. So we wait for prices to come into your discounted area. So I have used this Candbox tool over here, which I have marked from this bottom to this high, and I have few levels over here, which is your 30%, 50%, 70%, and this is your 100%. If we are looking for longs, if we are looking for buying, we will always expect prices to come at least till equilibrium or the discounted area. That means below 50% area. So as a buyer, we want discounts. The same thing happens in market. So now we know what our trading range is. It's basically from this low to this high. So we will use a tool called GANBox, which is right here. We'll place this over here and we'll stretch it to this high. Okay. It's basically the same tool I have used here. So we will wait for the prices to come at least till discounted area or at least till equilibrium for us to look for buying opportunities. So this is your discounted area. If you want to look for longs, within a leg, you will wait for the prices to come into your discounted area and then again you will look for longs from here. So that is the reason why prices retrace. And this is the most efficient way. After prices retrace, come into your discounted area, buyers who are actually interested to be invested in the markets, they enter and again prices go up higher. Now, talking in terms of bearishness, when prices are bearish, they are forming lower highs and lower lows, right? So when we take out this low, this was the extreme highest most point which we have printed, and this was the low from where we start retrace. So now we know our swing points are basically from this high to this low. We are contained within this high and this low. So again, the same tool we will use, GANBox, from this high to this low. And once prices come at least till your equilibrium or premium area, we will look for shorts. Why we will wait for the prices to come to our premium area? Because let's consider you are a retailer or you actually sell commodities or products by your own. Let's consider you are actually selling some sort of product or commodity. What actually you want, when actually you will make more money, when actually you will make more profits, when you will sell at higher prices, right? So same thing goes here as well. If you want to look for shorts, you will sell at a higher price. But if you want to look for longs, if you want to actually be invested in longs, you will look for discounted pricing. So this is the basic funda of premium and discount, and this actually works in markets as well. So if you want to look for shorts, you will wait for prices to come at least till equilibrium or above equilibrium, which is your premium area. And after here, if you get confirmation, you will look for shorts. So this was about premium and discount theory. Now let's talk about criterias for considering any retracement as pullback. What I mean by that. So let's consider in a case prices are bullish. They are going higher by forming higher highs and higher lows. So whenever prices give a push to the upside and whenever prices retraced, what are the criterias that we need to call this retracement as a pullback? So in this particular case, you can clearly see that in this first case, what happened? You got a nice impulse push to the upside, and here you got this minor pullback and then again continue to push up higher. So this is not a considerable pullback. It should be visually appealing. It should visually satisfy you that yes, this looks like a pullback. Now in this particular case, we got a nice push to the upside, prices retrace, and this is a considerable pullback, and again prices resume its movement towards upward direction. So this is considerable pullback. So this is your first criteria. Like the pullback should be sufficient enough, or it should be at least visually satisfying. This don't actually looks like a pullback. This is just one candle down, next candle up. This is actually a pullback where you are actually getting a decent push to the downside, considerable points in the retracement, and then again it continues to move higher. So this was your first criteria. Then the next criteria is the way it is formed. Now you can see that you got a nice push to the upside. This was a one candle down and next candle up. So this is not a valid pullback. But when you see here in this particular case, we got a nice push to the upside. Prices start retracing in a very corrective manner. Prices realigned, and then again prices got a push to the upside. Okay. So basically again bulls took the charge. So this happened how? Over a period of time, we got a considerable points pullback. When we compare it with this leg from this to this, we got a considerable point pullback, and then again it resumed its momentum toward upward direction. Along with that, if you are confused with what are the minimum points required for any pullback to be considered as a valid pullback, so what you can simply do is you can use your GANBox and see if prices are coming at least till top 30-35% of the area or not. Now in this particular case, it is retracing till 50%. It's well and good. But if the prices are retracing only till, let's consider 20-25%, so you can definitely hesitate to count that as a valid pullback. Okay, so things will get more clearer once we hop on charts, and we will discuss about how to mark actual swing points, and then we will discuss about the criterias for considering any retracement as a valid pullback or not. Hey folks, here's a quick note that I majorly trade two things: Bank Nifty and Euro USD. In Indian markets, I majorly trade Bank Nifty, and in Forex, I majorly trade Euro USD. So here I'm going to tell you one of my observation, and you can add it as a confluence conditions for considering any retracement as a pullback. Okay, so if let's say any retracement on Euro USD chart, this is tested, so you can actually rely on this particular data. Let's consider in daily time frame you have a 100 pips or 100 plus pips pullback. So then we can consider that pullback as a valid pullback. Along with that, it should also satisfy the rest of the criteria. That means the way it is formed, if it is gradually forming or if it is aggressively forming, if it has formed over a period of time or not. Considering all of those criteria, this is another one where if let's say you have a 100 or 100 plus pips pullback in daily time frame, then you can consider that pullback as to be a considerable pullback in daily time frame. Now in case of 4H, if you get a 40 pip or 40 plus pip pullback in 4 hours, so then we will consider that pullback as to be a considerable pullback along with the rest of the condition. And in 15 minutes, if the pullback is of minimum 13 to 15 points, then we will consider that as to be a considerable pullback. And how to measure that? You have this measuring scale over here. Now in 4H, from this low to this high is our pullback, right? So how much points are this? These are 257 pips. So this is a lot more than 40. So definitely it's a considerable pullback. Now in this particular case, this pullback is of what? 122 points. We need what? In 4H, we need what? 40 points. This is more than double. So that's the reason definitely we will consider this as a pullback. Now in this particular case, now prices are bullish, forming higher highs and higher lows. We got this as a breakout structure over here. After a breakout structure, do you think this is a considerable pullback? How much pips is this? It's 67 pips. We need what? 40. So definitely this is a considerable pullback. Now this is how much pip? This is 67.8 pips. So do you think this is a considerable pullback? No, this is not, because of the way it's formed. Even though it satisfies the pip count, but the way it's formed, it's not the best. It's not the best. It just formed one drop and a quick retracement. So this don't make any sense to call this as a pullback. So that's the reason this is our breakout structure and this is not a pullback. So we'll count this as our high and this as our low. So now we are contained within this high and this low. Prices again come to our premium area and then we got this drop. So from this to this is how many points? It's 143. So definitely a pullback in 4H. Now talking about daily time frame, you can clearly see over here that this was how much? This was about 300, more than 300 points. So definitely a pullback. This was how much? Over 300, definitely a pullback. Over 300, over 200, almost 300, definitely a pullback. From this to this, 169, definitely a pullback. Now in this particular case, if you see here from this to this, it's very close, 97. If I just try to adjust very properly, it's 98 almost. Okay, but this don't satisfy the pip count, and along with that, look at the way it's formed. Quick upside move, quick downside move. Don't make any sense. So we'll not consider this as a pullback. So that's the reason it is just continuing, and this is our high, and from wherever we start getting our actual pullback, that will be our low. So in this particular case, this is our low and this is our high. So I hope you got an idea about the pip count as well, and this is another confluence which you can add, and this has been tested. If you ask me what can be the pip count or what can be the point count in Bank Nifty, so I'm still testing that. I will need some time to actually let you know about that specific thing, but so far you can rely on this, and along with that, you don't actually need this specific data of pip count, because visually also you can tell that okay, this looks like a pullback, okay, this don't look like a pullback. Visually also, when you see any chart, you can clearly say. Now in this particular case, so far we are not taking the confluence of pip count just by having a look at this. Quick, no. The way it is formed, it's quick, no. One candle in, one candle out, don't make any sense. So you can rely on this specific thing so far for Bank Nifty. So now we're gonna talk about mapping and identification of the breakout structures. What does that mean? When prices are moving up higher, once we hit an area of resistance or a supply, we retrace, right? And then when we again got a realignment, and when again prices start moving up higher, and when we take out this high, we will get a breakout structure. But for breakout structure, we actually need a body closure above this specific high. Okay, so now in first case, let's see what's happening. The mapping of the high is basically with the wick in this particular case, but in general it will be the highest point. Whatever we have printed over here, it will be the highest point. Now in this case, it was a wick. So that's the reason we mark our high with a wick. Then prices start retracing, and when again prices start resuming its momentum towards upward direction, and when we finally take out this high with a body closure, we need a body closure in that specific time frame. If we are identifying breakout structures, then it will be only in that specific time frame. If we are identifying the breakout structure in 4H, that means 4 hours, then the breakout structure should happen in 4 hours. That means we need a body closure in 4-hour time frame. Then we will call this as a breakout structure. Now in this particular case, what happens? Prices go up higher and we got a wick. So this is not a breakout structure. In this specific time frame, prices fail to close above this high. The mapping is with the same point, which was the highest most point within this leg, which was this. We map the structure, and the identification of the break is with a body closure, right? So here at the time of the closure of this specific candle, okay, let's consider this was a 4H candle. So during the last 15 minutes, maybe we got a rejection. So we didn't get any body closure. So this is not a breakout structure. Okay, for breakout structure, we need a valid body close above the high which we have printed. Now in this specific case, the high was what? The body itself. So that's the reason we map our high using the body, the highest point within this leg. Whenever prices resume its momentum towards upward direction, when this high got taken out with a body closure, then we will call this as a valid breakout structure. And if we got a rejection in that specific time frame, let's consider this was a 4H chart. We mapped our high and prices failed to take out this high in 4H. Instead, we got a wick. So that means we failed to get breakout structure in that specific time frame. Now, as we know, the criterias for pullback, how to identify swing points, how to identify breakout structures, and all of these things. Now, let's actually go to charts and try to identify the things which we have discussed so far. To keep things simple, we are going to use only daily 4H and 15 minutes time frame for our top-down perspective to see where exactly markets are placed and what we can expect next. This is not only just to simplify your understanding, but this is how we are going to actually trade as well, by taking the confluences of only these time frame, which are daily, 4 hour and 15 minutes. Let's get started. Now let's try to identify our daily breakout structures. So now let's get started from this particular point. So what happened over here is prices got a drop, prices retrace, and then we again got a drop. So now we will call this as a breakout structure, because what was the lowest most point? It was this, and here we got a body closure. So this is our breakout structure. Again, after that, what happened? Prices again move up higher, and again we got this drop. But will we call this as our breakout structure? Look at the way this is formed. This is very aggressive. Just a quick upside movement and a quick downside movement. So this is not a valid pullback. Okay, so we will call this high and this low as our bearish leg. Even though we get a considerable point pullback, it has retraced till your 50%, I believe. But because of the way it has formed, it has not happened over a period of time. It has not happened gradually. It is just aggressive, one candle in and another candle out. So that's the reason we are not calling this as a valid pullback. So what's our valid pullback is? The one that happened over a period of time, very gradually, and then again continue its momentum towards downward direction. So this is not a valid pullback. So what's our immediate bearish leg? It's basically from this high to this low. Okay, so this high to this low is our bearish leg. What happened next? Prices again come to a premium area, test this supply, and again resume its momentum towards downward direction, and finally take out this low. So when we take out this low, what was the highest most point which we have printed? It was this. So this is our swing high, and from wherever we start retracing, it's this, right? This point. From here you got actual retracement. So this is your swing low. So now we are contained within this high and this low. What happened next? Prices again start moving up higher. Now if you have this doubt that this has happened very aggressive and aggressive out, but see the rest of the candle, they are happening gradually, right? It's just that when we are reacting from any specific area, that is when this price action is happening, the crazy one. But overall this happened over a period of time and gradually. So that's the reason we will call this as a valid pullback. And once this low got taken out, what was the highest most point which we have printed before taking out the low? It was this, right? So this is our swing high, and from wherever we start getting a true pullback, that will be our low. So we start getting the true pullback from here, right? So this will be our low. So now we got a retracement, and again we continue our momentum towards downward direction. So this was our low, and we simply take out that low. So what was the highest most point which we have printed before taking out this low? It was this, and from where we start retracing, it was this. Again we got a breakout structure, and where our body close happened. So here we just wigged it. So this is not a breakout structure. When we got a body closure right here, that's our breakout structure. So what is our highest most point which we have printed before taking out the low? It was this, and from here we start retracing. So this is our low. Now if you see in this particular case, what happened? We got a failure of this low. Where we got a failure? Over here. We got a breakout structure over here. So what was the highest most point before taking out the low? It was this. So this is a swing high. But if you see, will you call this as a considerable pullback? Of course not. The reason is the way it is formed. The way it is formed is very aggressive in and aggressive out. So this don't make any sense to call this as a valid or a considerable pullback. Okay. So that's the reason our swing leg is from this to this. Now you might be wondering that why not this? The reason is the same. formed. Look at the way it is formed. It is just consolidating. There is no valid pullback, like just in case like this, like this, like this, like this, like this, or even this, or even this. There is no, or even this for that matter, or even this. So here prices are just consolidating in a tight range. It is not a valid pullback if you see. Okay, so that's the reason we are eliminating this as well as this to consider this as a valid pullback, and this is our valid pullback, which happen over a period of time and very gradually, which satisfies the point count as well. So this is our high, and the lowest most point which we have printed is our low. What happened next? We got a push to the upside, and again prices take out this low. So now we got a breakout structure, and what was the highest most point which we have printed before taking out this particular low? It was this. So this is our high, and now it seems like we are getting a pullback from here. So that's the reason this will be our low. Okay, so this was about the market structure in daily time frame. It's as simple. Okay, it's as simple as that. Now let's try to identify our swing points in 4H. Okay, now we are in 4H time frame. The pink circle which you are having a look at, they are your daily structures. Okay, so now let's actually get started with our 4H market structure. So now first we got a breakout structure over here. So this was your 4-hour leg. So I am choosing some different color. Let's choose green. So this is your swing high in 4H, and from wherever you start retracing, you start getting actual pullback from here, right? So this is your 4H low. Now from here, ideally prices should have dropped, but what happened? We got a bullish breakout structure. Here we simply take out the high. Now here in this case, we don't get any body closure. Where we actually got a body closure is right here. Okay, so here we got a body closure, and then we got this kind of pullback. So now if you see, this low to this high is our bullish leg. Why not this is your swing low? Because before taking out this high, what was the extreme bottommost point which we have printed? It was this, right? So that's the reason this is our swing low, and from wherever we start retracing, that's our swing high. So this is our swing high. What happened next? We again take out this high. So from this low to this high is our swing low, and not this, of course. The reason is now we got a breakout structure over here, but look at this, the way this is formed. This is more likely a consolidation and not a pullback. From where we start getting a pullback, from here we start getting a true pullback. So this is our high. But now we are almost at the top of our daily leg, because this was our daily leg, right? If I just move to daily time frame, you will see that this was our daily high and this was our daily low. And why we don't consider this as a daily swing point? The reason is the way it is formed, right? So what happened next? Prices come into your daily premium area, but 4-hour it's still bullish. Now when you take out this low, we got a body closure. Now that means 4-hour has now turned bearish. So this is your high and this is your low. So what happened next? Again we got a considerable pullback, and then we got a drop. So here in this particular case, we got a breakout structure over here. Again prices retrace, and again we got a drop, and this actually happened over a period of time. Gradually it almost have taken over almost 1 day, like 20 hours. So this happened over a period of time. It's just that the way it targets this low was very aggressive. So what happened next? Prices just come within the top now the prices just come within the bottom 30%, and again prices resumed. Okay, then again we got a breakout structure. Even if, let's consider, you don't want to consider this as a breakout structure, it can be completely fine. So this will be a high, this will be your low. But again, when you take out this low, then your swing high is basically from this to this. Now if you see, the impulse is momentum push, but the correction is very consolidative. So it happened over a period of time. It's just that when it was about to break this low, it was very aggressive. So again prices come to a premium, and again we got this nice momentum push to the downside, and finally we got a breakout structure. Now this is not a consolidation, so that's the reason this will be our swing high and this will be our swing low, from where we start getting actual retracement. Now if you see in this particular case, again what happened next? Again we simply take out this low with a body closure. Even if it's minor, still it's a body closure. If I just try to zoom in, you can clearly see that we got a body closure over here. So that's the reason we got a breakout structure in 4H. So what's our swing point now? Our swing point is basically from this high to this low, because what was the highest most point which we have printed before taking out this? It was this. Again, when prices take out this high, we got a breakout structure. And now what's our high? Our high is this. Then what's our low? We got a retracement. Then we again got a break. That means this is our high. Then we again got a retracement. Now our 4H is bullish. From bearish, we have turned bullish. And again, we got this nice push to the upside, which take out this high with a body closure. I'll wait, see if you're actually getting a breakout structure with a body closure. Now here we got a body closure. Here we got a body closure. Again, now this is your swing low. So the low got taken out over here. So this is our high and this will be our low. And this thing continues. You can see how beautifully once your structure realign, every time it has to follow. You take out this low, right, with the body closure, not over here, but over here, you got a body closure, and then you got a retracement. You come to your premium area, mitigate, and then again you start dropping. Now, this is not a considerable pullback because of the way it's formed. It's mostly look like a consolidation. So from here, you start getting a true pullback. So this is your low, okay? From this high to this low, this is your swing leg. Again, what happened? Prices retraced. And again we got this drop. So what's our swing leg? It's basically from this high to this low. Now you might be wondering that why this is not a pullback, because look at the way it is formed. It's basically this buy to sell, but look at the way it is formed. It mostly looks like just a halt in the market. It's just one candle up and it take time to come down lower. This don't actually looks good. So that's the reason this is our high and this is our low. So once we basically take out this high, when that happened over here, when this happened, now we got a breakout structure. So before taking out this high, what was the extreme bottommost point which we have printed? It was this, right? Before taking out this high, this was the extreme bottommost point which we have printed, and we got a body closure over here. So that means this is our structure high and this is our structure low. Now we are contained within this low and this high. Prices come down lower and again prices resume its momentum towards upward direction, and finally we got a breakout structure over here. So before taking out this high, what was the extreme bottommost point? It was this, right? So this is our swing low and this is our swing high, and finally we got a breakout structure. Now when we got a breakout structure, it was first time just wick, so no breakout structure. Breakout structure happened from here. We got a nice push to the downside. So then this high to this low is our bearish leg. Okay, so what happened next? Prices come to your premium area. If you see, we just wigged it, but we don't get any body closure. So still this low is targeted as per market structure, because your this high is strong, which was responsible to take out this low, the 4H low. So this is a strong high and this is a weak low, which has not done anything significant. So that's the reason this is a protected high, and we just wigged it, and then again we start dropping and we simply take out this low. So when we take out that low, we got a breakout structure. And after that, we don't get any considerable pullback, if you see. So structure wise, what's our high? Before taking out this low, what was the highest most point which we have printed? It was this. So this will be our high, and from wherever you start pulling back will be our low. What happened next? Prices again come to your premium, and again we simply take out this low. So when we take out this low, where you got a breakout structure, it was over here with the body. We got a breakout structure over here. So what was the highest most point which we have printed? It was basically this. So this is the highest most point printed before taking out this low. So that's the reason our bearish leg is from this high to this low. Then again you got a considerable pullback. Okay, this is a considerable pullback. So that's the reason you got another 4H breakout structure over here. When that happened, again if you see, you got a retracement, and this happened over a period of time. Even though in daily this majorly looks like a consolidation, but in 4H this actually looks like a good pullback. So that's the reason I counted this as a pullback. So now this is your 4H high and this is your 4H low. So once this high got taken out, okay, now you have turned bullish in 4H. In 4H you got this nice bullish push to the upside, you got a retracement, and again you got a nice push to the upside. You got a breakout structure over here. Then what happened next? You got another breakout structure here, because this is considerable pullback. After a body closure, you got a considerable pullback. Minimum number of pip counts is there. Basically minimum points for retracement is there. It happened over a period of time very gradually, and basically we have taken out this high again. So now this is your low and this is your high. Now we got a breakout structure over here, but look at the way it is formed. It is just quick down, quick upward momentum. So that's the reason I'm not considering this as a pullback. So when we take out this and then we got a true pullback, so basically this is our high and this is our low in 4H. So prices come within this, and then we realigned, but we again failed to take out this low. We got a push to the upside, we mitigate something very precise, and then we basically take out this low again. So now what's our 4H leg? Our 4H leg will be from this high to this low. Now you might be wondering why not this, because look at again the way it is formed. It is basically a quick push to the upside and a quick drop. So that's the reason this is not our swing leg. Our swing leg is basically from this high to this low. Now when this low again got taken out, now this was the highest most point which you have printed, and none of this is the actual structure. None of this is the actual structure. So the major structure in 4H is basically from this high to, as of now, this low. Okay, so this is our 4H structure. So yeah, that was about 4H. Now let's get started with our 15 minutes market structure. So now let's get started from here. So once this low got taken out, what was the extreme highest most point which we have printed? It was this. Now we are contained within this high and this low. So this is a bearish leg. So once this high got taken out, we will get a bullish breakout structure. So now our market structure in 15 minutes will be bullish, and we got a body closure over here. So before taking out this high, what was the extreme highest most point which we have printed? It was basically from this low to this high. What happened next? Prices come into our discounted area, and again we resume our momentum towards upward direction. And what is our targeted high? It's basically this, because when markets are bullish, the highs are usually targeted. So here we take out that high, but with not a body closure. So this is not a breakout structure. Let's go ahead, and here we actually got a body closure. So before taking out this high, what was the lowest most point which we have printed? It was this, right? So from this low to this high is our bullish leg. Okay, but what happened next? We simply take out this low which we have printed. This was the lowest most point, and we have simply taken out that. So when we take out this low with the body, what's our bearish leg will look like? It's basically from this high to this low. What happened next? We got a considerable pullback, and again we got this drop, and we simply take out this low. So now what's our bearish leg look like? It's basically from this high to this low. So this is our bearish leg. Now when we again take out this low, what our bearish leg will look like now? It's basically from this high to this low. Once this low got taken out, what was the extreme highest most point? It was this to this, because from here you got an initiation of a true pullback. Then again, when this low got taken out, what was the highest point which we have printed? It was basically from this high to this low. So this is our bearish leg. Now when this low got taken out, what will be our structure look like? It's basically from this high to this low. What's the reason of not considering this as a valid pullback? If you go slightly to the higher time frame, you will notice that this was not actually a breakout structure. This was just, I just wigged it. We got a retracement, and then we got a quick drop. So that's the reason it was not a very cleanest breakout structure. But if that point of time, if you would have considered, not a problem. There are a few other things which will have helped you to not get into the wrong direction of the markets. So we'll talk about that in our next few videos, but not right now. Let's not complicate the things. So here we got a breakout structure. So this was our high and this was our low. So this was our high and this was our low. What happened next? Prices come to our premium area, mitigate the extreme, and again we got this push to the downside, and we simply take out this low. We got a breakout structure, considerable pullback, and again a drop. So when this drop happened, we call this as a breakout structure. Now if you see, the way this is formed is decent. It's just that the down push is aggressive. So that's the reason we can call this as a valid pullback. After that, if you see, this also happened usually over a period of time. Like it has given a considerable points pullback. It has also consolidated and formed over a period of time, and we got a breakout structure. If you see very clearly, it was here. So if you want, you can actually consider this as your swing high and this as your swing low. But as I tell, if things are not very clear in 15 minutes, go to one higher time frame. You will get slightly more clarity. Now if you see what's happening in 1H, none of this looks like a pullback. So from this high to this low, you can consider this as your 15 minutes bearish leg. Okay, so we are not going to actually trade based on one H structure or 1 hour structure. It's just that it will help us to understand when 15 minutes are not cleaner. Now in this particular case, we got a breakout structure, and then we got a considerable pullback, and then we got this drop again. So now if you ask me what I am expecting next from the markets, if this low got taken out, something like this, we can actually expect prices to take out this low and resume its momentum towards downward direction. But if this high got taken out, then we can actually expect prices to go up higher and come to some premium area in higher time frame. Maybe in daily time frame, we can expect prices to move till something like this. We'll talk more about this in multi time frame analysis, but I hope in this video you got a better understanding of what swing points or what pullbacks to be considered as a valid pullbacks or not. So I hope in this video you got a very clearer understanding about which pullback to be considered as a valid pullback and which pullback to be not considered as a valid pullback. You get a better understanding about identification of your swing legs, basically swing highs and swing lows. You got an idea about trends, bullish and bearish. So that was the intention of this particular video. So I hope you enjoyed this, and in the next video we'll talk about different types of structures. The whole intention of this video was to make it very clear about swing highs and swing lows, basically your swing legs. So I hope things are clear. See you in the next video.